The stock market has responded to the COVID-19 pandemic with worrying volatility as traders and investors have panicked and bought and sold out of fear. In this video, we shall discuss how has the coronavirus impacted the stock market at large. COVID-19 is unique in that it is a supply, demand and market shock. A rush to safe haven assets such as the US dollar, yen and euro has caused other currencies to weaken. A hopeful V or U-shaped recovery depends upon the timing and magnitude of government assistance, as well as the level of corporate debt, and how companies and markets cope with the lowered aggregate demand. India's real GDP growth decelerated to its lowest in over 6 years in the 3 quarters of 2019-20. Investor sentiment in India is so low that despite relatively lower cases, Indian stock markets have performed the worst amongst global peers. Indian stock market has lost about 27% in value terms between the 1st of February and 26th of April 2020. Nifty has corrected from about 12,400 to 9,300 levels, while Bank Nifty has corrected from about 32,500 to 20,000 levels. The lockdown is likely to have a sizable impact on the economy, most significantly due to the imbalance of demand and supply. Let us have a brief overview on how the coronavirus pandemic has affected some of the sectors of the Indian economy. The automobile sector contributes about 7.2% to the GDP and provides employment to around 4 crore people. The automotive sector was already facing weak demand. Production shutdown across the country due to the pandemic will adversely impact the sector even further. Availability of contract labor for operations and support functions may be an issue even after the situation normalizes. Consumer sentiment has also been affecting this sector as consumers have been postponing their vehicle purchase decisions owing to the uncertainty surrounding the pandemic. The impact of all these factors can also be seen in the performance of automobile stocks, which have seen an average correction of about 25% in the last 3 months. The pharma sector provides jobs to around 2.7 million people in the country. India depends on China for around 70% of the APIs that it uses in pharmaceutical manufacturing. API imports from China have seen a 40 to 50% rise in prices in specific instances. Pharma manufacturing has been exempted from the lockdown. There's a spike in sales over the short term as consumers stock up on essential medicines. Consumer sentiment has not impacted this sector. There's an increase in exports as developed countries stock up on the essential medicines and drugs. The impact of all these factors can also be seen in the performance of pharma stocks, which have seen an average rise of about 35% in the last 1 month. The FMCG sector contributes about 10% to India's GDP, providing employment to about 8% of the country's population. Cash rotation would slow down for all categories. The food and grocery retail would be less impacted. Production for specific categories, especially non-essentials, would be a major challenge, with demand unlikely to pick up immediately. Supply chain seems to be the big challenge and needs realignment given recent announcements on essentials. With a stronger demand for delivery through e-commerce portals, consumers are likely to buy more essentials and postpone the purchase of non-essentials. The impact of all these factors can also be seen in the performance of FMCG stocks, which have seen an average rise of about 12% in the last 3 months. The aviation sector contributes about 2.4%, while tourism contributes about 9.2% to India's GDP. Both the sectors combined provide employment to around 43 million people in the country. Due to large-scale cancellations, the Indian Association of Tour Operators estimates that the hotel, aviation and travel sector together may incur a loss of about 85 billion rupees due to the travel restrictions imposed on foreign tourists. Impact is likely to be felt on both blue and white collar jobs. Outbound travel and inbound travel to India will be at an all-time low. The impact of all these factors can also be seen in the performance of aviation stocks, which have seen an average fall of about 40% in the last 3 months, this despite the falling crude prices. This has been the impact of the coronavirus pandemic on some of the sectors of the market. Hopefully, the number of cases of virus-affected persons will turn bearish in the days to come. Until then, stay home, stay safe, and happy trading. For more such insights, you can follow us on Twitter or LinkedIn.